Good day, fellow investors. No president can change the long-term fundamentals. There can be short-term trades, as you will see them discussed in the news now, and we have had some market reactions already today as I'm filming this with cryptos at record highs. But to get profit from this, you need to sell to gain on the short term, and you might have had sold everything already in 2018 when corporate taxes were lowered. So to gain on short term, you need to sell and then play, lose here, lose there. That's not important for long-term investors. What is that no president can change the long-term fundamentals of anything. And if you want to play on long-term fundamentals, Stanley Druckenmiller is the one to follow, even short-term. And October, he took a position against the Federal Reserve. Just look at what happened there. So he already made his big money. However, long-term fundamentals are key to watch, and left, right, those are just nuances. No matter who is the president, who is in the Senate, it doesn't change, unfortunately, the long-term picture. Because when it comes to economics, investing, money, there is no free lunch. If you give here, you have to take here, and the other way around. That's simply how it is. And yes, for a short term, the dollar is rising today. If you look at the long term, that's just a blip, and there are these long-term cycles, but again, one president, the other president, not much of a change. We have had Democrats now, deficits were huge and still are huge. Look at this, actually higher and higher expected to be, and maybe they will be a little bit higher next year, maybe a little bit lower. It is practically irrelevant. The core idea is that the national debt is slowly but surely creeping up, and up is expected to continue going up and up to 131% of GDP by 2034, and that is one fundamental that no president will change. Then we can discuss also huge new tariffs. There will likely be tariffs going ahead now. However, when you look at tariffs, okay, there is the short-term benefit, more expensive buying from China, thus more buying of domestic stuff also globally. However, tariffs again have a cost because everything is more expensive. Inflation, less spending on other things, so you might have a slow bump, and then again, even economically, they say it is then lower in 2-3 years, the benefit is lower, but it's always a good populist selling point to increase tariffs, etc., etc. It has never worked, and we will see how it will work in the future. You might see a short-term benefit, which is what you voted for, and that is okay. But again, speaking of fundamentals, if we go back to Stanley Druckenmiller, the coming fiscal horror show, no matter what party is at the helm of the country, America is eating its seed corn at the expense of future investment. The coming demographic storm is one key. So major healthcare programs, Social Security will just grow and grow as part of GDP spending. And this is, the source is the Congressional Budget Office, nothing crazy here. The fiscal balance, we have had the pandemic and the necessary spending there, but after the crisis and everything, the 2009 crisis, governments just said, oh, let's just spend in eternity because we can just borrow forever. And Druckenmiller says that it's time that Washington policymakers let go of the false pretense that cutting entitlements is a choice. It is not. Either they cut entitlements today, or they will have to cut them much more tomorrow. Now, Stanley is completely correct. But what politician would gain more than 1% of votes by going around saying it will cut entitlements or raise taxes or have the next few years be a little bit more difficult for you to have a better long-term prosperous future. A value investing politician? No way, it's impossible. So all politicians have to be populists because it's not about the politicians, it's about us, the people. We select the politicians, we decide what we want. And people are short-term oriented. We see that in the market, we see that in politics, we see that in economics, no matter who is the president. We have deficits that will just keep on growing. Everyone intends to spend more and more. And when you have larger debt, then also the net interest as percent of GDP, that was very low because of low interest rates, perhaps higher interest rates, or just raising, compounding debt, the percent of net interest of GDP will just keep on going higher if nothing changes, and nothing will change because nobody can win an election by changing this. And it will be 27% of outlays if linearly it continues to 2050, which is insane. But as I said, we all vote for now, next year, we'll do better for workers, for this, for that. But long term, nobody votes for 2039 of 2050. That's how the system works. And the only way to change this is pain. And pain only comes when all the short-term possible levers are used up, and then there is no more chance of those short-term cycles, and then the long-term debt cycle reverts, and that happens once every 75 years, century, like we have had the Great Depression in the 1930s. We have had a glimpse of that in 2009, but then with more debt, the issue has been solved. Now we have 3 times the debt of 2009, which was a debt crisis. So we will see when and how will this end. It usually ends up in pain. I hope we will be smart enough to work it out and then continue living as good as we can. But the great times of the past are exactly that, of the past. Short term, anything can happen. The fundamentals are unfortunately very bad. For investing, let's just stick to the fundamentals. Let's stick to the margin of safety. Those trades might work for a while, might not work. You need to be a trader for that. But buying at the margin of safety, no matter what happens, is always the right way to go, no matter who is the president.